Hello and welcome to another episode of Market Maker Mondays, where we break down the S&P 500 and the dollar index. And what I'm actually going to start doing is adding a bit more structure to these now I'm slowly getting back into it. So in this episode, expect to see a breakdown of where we are in the dollar, what I anticipate is actually going to be coming up into the next week and then moving over into next month potentially. And then we'll also have a look at key levels and some narrative around what's happening on the macro time frame. So I've actually been focusing on this being the origin of the move. If you zoom all the way out, we've actually got this low and then we've retraced back up here and a continuation. However, if I go up to a quarterly time frame to zoom right out of this price action, the reason why I don't believe that we are in another retracement of this being A, B, and then a retracement continuation here is because I think we have unfinished business. So if this was actually the starting point, which was a very, very long time ago, January 1985, to point B, which is July 1992, where we've actually come back up here, we've actually left equal highs, which was from April 1986 to July 2001, and we didn't actually reach a premium. So it shows two things really, that we were really heavy and we had a big sell-off in 2001, 2002, and then we've actually taken the sell side liquidity here, and then now we've seen a reversal. And then on the quarterly time frame, we do actually have this bearish engulfing candle. However, we've naturally seen no follow through at all, and we're actually almost at the end of this quarter candle. So today's date is the 11th of March 2023. So this would have been the previous quarter from last year, the end of 2022, and we saw that we had a big like bearish quarter, so the 3 months of the year. And then what we've actually done is we've actually traded below the low of the previous quarterly candle, and then we've actually come back up into here. So I think we are heading for this here to then trade back up into a premium for this original move. And if you go up to the 6-month time frame, and if I put my fair value gap tool on, those that have been following me for a while, you can see that I've changed the color slightly. So we've actually got this here, which is now holding price. So if I draw that out in time, switch this off, and then go down to the monthly time frame. In fact, up to the quarterly time frame, you can see that price traded back down into this BISI, this fair value gap here, and then we've rejected the low and we've actually come back up. So we are trading within this range here. So this can be a CIBI, but then it can turn into a BISI. So we're just waiting for confirmation whether or not this has switched roles. So if I go up to the monthly time frame, so it's the 11th of March now, and this is what the candle's showing. What we've actually done is we've traded into this volume imbalance here. So we tapped down into this confluence area, taken the sell side liquidity here, then we've actually had a reversal. So this is actually now showing momentum to the upside to trade into this imbalance here. If I show you this current dealing range, we did actually in fact come back down into a discount. And if I bring this up as well, so we have this CIBI, bring this out in time here. So not only do we have, so although we've actually not traded above the actual high here, we've actually traded above the close. So this can actually be counted as an advanced market structure shift. So I'm going to, in fact, use this as a breaker candle. So we've actually traded up into this breaker. We've actually traded up into this fair value gap here, the consequent encroachment. And then when we go down to the daily time frame, you can see just how pleasant this price action was for that reversal. So if you're following along so far, the narrative is we traded from up here, top left, down. We broke the lows, then we reversed. Excuse me. Then we've traded higher. We reached a premium PD array, and then we've actually come back down lower. Now, at the moment, the institutional order flow on the daily time frame remained bullish. So that is where our focus needs to be. So we have in mind where we're trading higher. We've got institutional order flow, which is trading to the upside. And then we've also got these volume imbalances here as well. All right, so this volume imbalance, which held price, and then we traded higher. And then we've had this. Now what we've actually done is we've gone up and we've actually traded within this volume imbalance. But if you look, there's actually no candle bodies within this price area. So although we have actually traded up and we've actually pulled back on the daily time frame, after seeing this rejection here, even though we had some really high impact news last week, which has actually affected the strength or the potential strength of the dollar, that's actually already been factored in, because all we've done is we've actually now taken the sell side liquidity here. So the narrative on the dollar index, excuse me, I do apologize about the coughing as well. I'm just getting over COVID. So I've not been very well. So the narrative remained bullish. So I'll be expecting a 1 and a 4 hour smart money reversal here to then push up. And I want to see price move above this. And if you remember as well that we had this area, which was actually the 6-month key level, we're actually still holding now above that consequent encroachment of that significant level. So the dollar index is bullish on the daily time frame. What we've actually done on the weekly time frame is we've actually had an outside week, so we've cleared orders on both sides of the market. I mean, I personally would like to see us to come and take the lows here, because a lot of retail investors will see this here as a high test candle and a reversal to the downside to see a continuation. So what I would like to see is I'd like to see seller failure, where it gives smart money an opportunity to buy below the lows here to take out this liquidity, to trap sellers into the market, and then we know then that there's going to be engineered liquidity here. So that's what I'll be looking out for next week in terms of the dollar index. However, we're definitely showing signs of bullish, and it's very advanced price action at the moment. And I'll be honest, I've really not been looking forward to making these videos quite so much, just because I can't be very, very specific. And a lot of the time I listen back to the videos and I just get a little bit paranoid that it sounds like I'm a bit on the fence. And I don't really want to do that. I do want to have a firm opinion, but you've also got to just read what the market is telling you. So we've actually pushed higher. We've taken the buy side liquidity here, and we've actually traded into this volume imbalance. And then we've actually had a failure at the lows here. So I see this now as the potential for more bullish movement to the upside, and we'll come up into this range here. So where we have this dealing range, we've actually got this imbalance in price. So my target over the next coming weeks and months is going to be up here. I mean, you won't see these levels on my charts because I clean them off all the time. But if we need to just see what that looks like. Obviously, we still need confirmation. And if we, by all means, if we actually trade lower here and then we start to see this consequent encroachment acting as resistance, I'm not going to ignore that. I'm going to reconsider what the bias is, and I'm going to confirm what that looks like on the S&P 500. So that's what we have there. We could even come back lower, of course, and to take this for the short term and then continue to push higher. So we just need to be mindful that we're continuing with whatever the daily bias is or the institutional order flow. And at the moment, it's still bullish. So that remains bullish. And then let's go up to the S&P 500. So I can't help but notice that this is advanced market structure, and this does look like it wants to be like a retail inverted head and shoulders or a crown to go higher. And I'm very, very mindful of that. I want it to go lower. And at the moment, obviously, with this failure in price here, this rally up just gave us an excellent opportunity to push lower. So we have two dealing ranges at the moment. We have this dealing range, which we're actually in a deep discount now. The next objective is going to be here. So this could actually be the completion of a market maker sell model. So this is the original consolidation. We've got a push higher to reaccumulate, and then a second reaccumulation and a distribution. And then we're basically just seeing this now is capturing the liquidity, which would actually put us below these lows here. We do actually have other levels, just like the new week opening gaps, which actually puts us in and around this region, which I think is going to be a fantastic confluence for projections to the downside. And obviously, where we have a bullish dollar, then that's when we are expecting bearish indices and Forex as well. So the daily downtrend, basically the institutional order flow is definitely bearish. And we also have this parent dealing range. So what I'll do is to make it nice and neat. And that is slightly out, but you get the objective. So we've actually got this here for sell side liquidity to the downside. Now we may need to see some relief because of obviously the downward pressure that we've had last week, and then obviously we've had an extended run. And then if we are looking for fib extensions of this fulcrum point, which actually puts us right in target to this sell side liquidity here. So this is going to be the next objective for me to the downside, which would actually put us lower. And then we've also got this level to the downside. And then so we've got this one. So the chances are, because we've actually got this here, we're actually gonna crash right the way through it. And exactly the same with this one as well. So that puts us three fantastic projections back down into a deep discount on this, and then obviously the final terminus for the overall bigger market maker sell model, from this being the original consolidation pushing higher. So what I also like about the narrative for this now to be bearish is, if I just remove all of that, what we've done, so if I go all the way up, so we've had this 6 month sell-off, then we've actually created this bottom. But you can see that where we've traded back up, we've actually traded back up into this bearish order block, and we've had a big rejection. And then we've now pushed up for this final quarter, and we've had this massive rejection as well. I'd like to see this now trade below here, within the next couple of weeks would be absolutely fantastic. So it's about 100 pips, is that? So from here to actually close below the lows here, the open and close prices that we've actually got grouped. So that would actually be an area of interest there to the downside. And we actually trade below that, then I can see us coming to take the low from here and then to come back into this order block. But yeah, like I said, what I like about this is we've got this here. So where we've actually created this swing low on the monthly time frame and we've pushed higher, it's the 11th of March as a reminder today. And what are we doing in the current price action? We've traded above to take the buy side liquidity here. Then we've actually failed with this overall key level. So you draw that out in time. That is very significant there. Price is really being held firm there. And now we've actually got this swing high that has formed on the monthly time frame, and we're actually trading lower than this candle. So if we were just doing nice and simple like this would actually be your macro sell side liquidity. And if we go up to the daily time frame, there you go. So we're going to trade to take the low here, but we just continue to keep running onto this one and then that one, which actually gives us that projection. However, we've actually got these key levels as well. Go back up to the quarterly time frame. No, 6 months. No, it's the monthly time frame. So we've actually been unable to trade higher than this here. So we've actually got those relative equal highs on the daily time frame here and here. And then this was bullish, or a bullish institutional order flow. And then we've had this reversal. And then we're now pushing to the downside. So safe to say that we are actually currently bearish, which is fantastic for anybody that wants to offload some investments into the like the S&P 500. Anybody that's dollar costing down, I would say you should buy every time we break the low. So you buy a chunk here, you buy a chunk here, you buy a chunk here, you buy a chunk here. I'm actually just, if we actually get back down to this, then this is where I'm going to start pulling the trigger on some larger investments. I think this is a really good opportunity for some cheap investments, because the amount of time that we've actually been waiting to get lower prices with this, so since October last year, 151 days, we've actually been looking like we wanted to push higher. So I was actually starting to do some grouping here, just because I feared us actually coming lower. I mean, that's a side note really for the topic of this video. But let's go down to the 1 hour time frame. So what I actually want to suggest that everybody does is, when you are having a look at the overall price action for the week, we have a look at the missed opportunities when we're doing our review, when we're actually reviewing our trades for the week, profits and losses, and we're journaling all of that. Then we need to be paying attention to just pick out, obviously in hindsight, where the market reversed. Now, I called this turning point in the Discord group way ahead of us actually moving there, because if we are bearish and we see a consolidation, then we'll actually break out of the consolidation in the opposite direction, which does two things. It traps buyers into the market, which engineers liquidity here, and then it also gives smart money the opportunity to get a cheaper investment. And then that took us back into a premium. So this was the premium PD array that I liked. I didn't have anything higher than this, because this is actually an institutional order flow entry drill. because we've got this fair value gap here and we've tagged into it and then we push lower. So I actually saw this as the last line in the sand because we've already had a psychological move here. If we'd have traded above this area, above this consequential, the CE of this PD array here on the 1 hour time frame, the 1 hour time frame is key for the daily run. The daily run is key to put us on the side of probability with the weekly expansion. So into next week, we are looking, this is the weekly candle. We're likely to push lower to take this next week. That's very likely. And we've also got this new week opening gap here, a new week opening gap here, and then we've got the CE of this here. I'll let you go in and draw some of the other key levels that I've walked you through already. But in terms of the approach to the market is we are starting on the weekly time frame. We've got the weekly expansion. We know that obviously this has been a really nice push down. We have this as resistance. So this is actually going to be where I project us to move back up into for the high of the week, and this area here, if we trade any higher than that, so you can see that we've actually got this key level here as well that has been respected. So I wasn't expecting price to move higher than this on Friday because I've been using the new consequent encroachment of the wick theory. I used it here. I also used it here. So once we'd actually traded and rejected this, and then we saw signs that we wanted to trade lower, then I was actually calling out those lower prices. And if you're not in the Discord group already, if you are interested in learning ICT stuff, there's plenty of chatter in there. Check out the link in the description of this video. Obviously, my socials are in there as well. So please like and follow and subscribe to obviously all the various things. Please like the video and share the video as well. So you can see that we've actually pushed higher for the high of the week here on Monday, and then we've actually had this market reversal. So this was actually a smart money reversal, advanced market structure, which to me is basically it's a head and shoulders pattern. And then we've traded to the downside. Institutional order flow is now back to being bearish. And then we've traded back up into a premium later on in the week, which was Thursday, after seeing 2 days of consolidation. And then once we've actually reached that premium PD array on the 1 hour time frame, which is absolutely essential to catch these big moves, the 1 hour time frame should be your key to day trading. Essentially, if all you were doing is day trading up and down all week, all you need to do is you only really need to focus on the 1 hour time frame. So you're looking at plotting PD arrays on the 1 hour time frame, but then also use the higher time frame narrative to your advantage to get those big moves. And then so we've pushed up higher into this premium PD array, and then we've actually then started to trade lower. And then on Friday we've had lots of activity, and I wouldn't be surprised if we come up off the lows or we consolidated around this level, because this is really rough price action backwards and forwards. Needless to say, it does look very balanced if you look at it. On the 4 hour time frame, we've got this small imbalance here, which actually puts us in line with the rest of this confluence, which would put us at the bottom of the boundary for the overall weekly. We've got this volume imbalance here, this new week open gap, which is just above this 4 hour PD array. And then just for completion's sake, that would put us in and around a premium. So maybe we trade outside of the lines here on this 4 hour PD array, but in order for this, for me, into next week, the full confirmation is I don't want to see the 50% acting as support. So if we actually trade above this region here and then we find support and then we see a smart money reversal here, then I'm going to see that as an opportunity to get long into this displacement. So hopefully that has been useful. Hopefully there's been a lot more meat on the bone of this one, and it's been a pleasure making the video. Please help me grow the channel as well. If you share this into any groups that you're in, if anybody's found it useful, please share some feedback in the comments below because it does help. And smash the like button. And if you're not subscribed already, please subscribe for regular updates every week with these videos. Okay, until next week, good luck and good trading, and I'll speak to you in the forum.